Assalamualaikum and hi to Dr. Hanif and my fellow friends. Today, our group will discuss the issue about debt in retirement. So, this is our group. We have 5 members, which is Nur Alia and Shira, Wan Nurina Dalia, Nur Adlin Sofia, Nur Hasnida, and Dia Irdina. Retirement planning is very important because it helps us maintain our lifestyle after we stop working. In Malaysia, this has become even more crucial due to longer life expectancy, rising medical costs, and higher living expenses. The Employees Provident Fund, or EPF, is the main retirement savings tool for Malaysians, but studies show that many contributors don't have enough savings to last through retirement. One of the biggest problems faced by retirees is debt. Many still carry mortgages, personal loans, credit card debt, or even education loan into retirement. This happens because of factors like the high cost of living, long housing loan periods, insufficient savings, and family responsibilities such as supporting children. According to Bank Negara Malaysia, household debt levels here are among the highest in Asia. This means that often continues even into old age, reducing retirees' disposable income and forcing them to rely on family or the government. So, debt in retirement is a serious issue because it threatens financial independence and overall security.
So one of the issues in retirement in Malaysia is debt, and we have several type of debts that have been lingering among retirees in Malaysia, and one of them is mortgage debt. So mortgage debt is the most common debt Malaysian has that will has effect in their retirement days. While housing price is increasingly years by years, and this make them to have a housing loan up to 30 to 35 years. Even some have still to pay their housing loan at the year of 60 if they buy the house late. And according to Bank Negara Malaysia, loan stretching reduce monthly payment, but it's extend debt into retirement. Loan stretching is you make the monthly payment is more manageable, but you have to pay until your retirement days. Next is credit card and personal loan debt. Credit card carry a very high interest of rates, mainly 15% annually, which are highest for the retiree to pay until their retirement days. And retirees who mainly rely on their credit cards to pay for their household item may retire with the outstanding balance that they cannot pay off easily, because as you late pay all of those debt, the interests are very likely to be higher. And according to the Malaysian Insolvency Department, those who are retired that use credit card the most are the civil servants, and the consequences of these issues was they have to mainly cut to buy all of their needs, as they have to pay the debt first, and they also have to rely on their children's support in order to settle off all of their debts. And lastly is education loan. Some parents be their children's guarantor for PTPT and an education loan, and if their children cannot pay back the loan at the time that they are supposed to pay back the loan, then it will put their parent at jeopardy, as their parent have to pay the loan in the names of their parents. And this is the real case that happened in Malaysia, as 60 years old man has still have to pay their student. Next, I will talk about why debt still remains into retirement in Malaysia. Firstly, it's because economic pressure, particularly if you are staying in urban areas. It is a high cost of living, and also mostly retirement have to deal with expensive medical expenses, and household debt is equal to 1.65 trillion, which are equal to 84.3% of Malaysian GDP, which are among the highest in Asia. Mortgage debt contribute to the highest effect of this, as the retirees still have the loans in their retirement eras. Next is cultural obligation. Some parents feel that they are obligated to pay for their children's PTPTN loans or education loan, and when their children delay the repayment, they have to pay back. And PTPTN outstanding loan in Malaysia is equal to 5.8 billions in 2024. And also, besides that, the lifestyle loans, such as for cars, travel, and for life upgrades, also contribute to these factors. And lastly is inadequate saving. In Malaysia, only 33% of EPF member that has 240,000 in their EPF account at the age of 55, and 48% who are below 55 years old have less than 10k in their EPF. Reliance on credit card and personal loans in old age will put the retirees in debt trap, as they still have to pay the loan at the age of 60 or and above.
Okay, hi everyone, I'm Dia Osman, and I'll be talking about the consequences of debt in Malaysia. So, retirement is meant to be a time of financial freedom, but many face the ongoing debts from mortgage, credit cards, and others. So, the long loan tenures mean that retirees often carry the mortgage into their 60s and reduce their disposable income and access to healthcare. The high interest debts like credit cards could worsen the burden and sometimes lead to bankruptcy, especially among the former civil servants. Retirees also struggled as a guarantor for their own children, as they were taking out education loans from PTPTN, or that will cause the intergenerational debt. On top of that, the cultural obligations like funding weddings or family events could add the pressure. With the household debt of 1.56 trillion ringgit and low retirement savings, many retirees will fall into the cycle of debt dependency. In fact, there will nearly half of EPF members have less than 10,000 ringgit saved. In conclusion, the retiree debt will threaten the financial security and dignity. So we must raise the awareness and improve the retirement planning to ensure a more.
Now I am going to demonstrate the recommendation on how to manage debt during retirement. To begin, individuals need to attempt to be debt-free before they reach retirement age. This is to settle enormous commitments such as housing loans, personal loans, or credit cards at least 5 to 10 years before retirement. In this manner, retirees can be stress-free and direct their limited funds to daily expenses instead of setting debt. Next is retirement saving must be boosted as well as the sources of income diversified. Besides mandatory contribution like EPF, people can voluntarily top up with increase, invest in private retirement scheme, or opt for sale investment product like bonds and unit trusts. Having more than one sources of income, like rent or part-time work, can help reduce financial pressure. Moreover, discipline and lifestyle in money matters are required. The retirees need to re-examine their spending, scale down where necessary, and spend needs over wants. For example, moving to a smaller house or selling high-maintenance assets reduce expenditure and create cash. Furthermore, medical and insurance planning must not be forgotten. Medical costs rise with the age of a person, and without insurance, retirees will have to take loans to finance hospitalization. Planning ahead by having takaful or medical cover and saving a healthcare fund ensure protection against financial ruin. Finally, financial literacy and taking professional courses are the ideal choice. Few retirees realize the influence of inflation, interest, and poor planning on their debt. Financial seminar education from banks and seeking guide from financial counselor can assist in planning money effectively in retirement. In brief, with these tips, debt-free saving up, living with one means, health cost planning, and financial literacy improvement, retirees can enjoy a secure, debt-free, and fulfilling retirement life.
For the conclusion for this topic, debt in retirement is a serious issue in Malaysia because where many retirees remain burdened with mortgages, credit cards, personal loans, and education debts. So these debts reduce disposable income and force retirees to depend on family or government aid, defeating the true purpose of the retirement. So the causes it includes rising living costs, culture obligation, and insufficient savings. So for the consequence, what will happen to them, because they will have a lower quality of life, difficulty covering expensive or healthcare, emotional stress, and risk of becoming a burden to children. So the solution to make sure that the consequence will not happen, they need to plan debt-free before the retirement, diversity income, practice financial frugality, prepare for healthcare costs, and seek financial advice. So overall, Malaysian, especially the younger generation, must practice early planning and responsible financial management to ensure retirement is a stage of peace, independence, and financial security.